Good afternoon. You're tuned into Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi as well as Pankaj Podar. And the market is not looking too healthy and happy at the moment because 17,300 is something that we have just managed to claw back. But look at that V-shaped, mark that you can see on the intraday chart when we slip below the mark of around 17,300, 17,260 thereabouts for the day's lowest point. And we are below the 200-day moving average, and 8th day on the trot. The Indian market has been on a declining trend. It's the auto sector which is managing to buck the trend just ever so slightly. Remember, tomorrow we'll get the monthly auto sales data. So ahead of that, maybe some bout of buying happening on the auto stocks. But other than that, it's Adani group of companies which also continue to be in focus, with the exception of Adani Gas and Adani Transmission. Actually, all the Adani group of companies have managed to show a solid recovery today, whether it's the cement name or Adani Enterprises, Adani Ports. They're all holding up in the green. And of course, we have a big macro data to watch out for, Aisha, in terms of the Indian GDP, which will be out later tonight. And that will drive, the further economic consensus on the street. But for now, the market is just not looking at buying any positive news. It's just the negative news that it's looking at. Half glass empty.
Oh yeah, absolutely. I mean, look at the way Cipla or a Vedanta, both of those stocks are reacting to, or for that matter, the continuous fall that you are seeing on the Adani group of names. No respite really when it comes to that faction of the market. So just looking at a couple of names here, Bank of India, for instance, while Morgan Stanley is maintaining its overweight stance with a target price of 125 rupees per share, they're saying that the shares are going to rise relative to the industry over about a time period of 60 days, I beg your pardon, and that they're well placed on a strong balance sheet. So that's one stock which is actually holding out in trade. But look at a Paytm, for instance, the way the market reacted yesterday to what it's doing today, where the stock is down 5.25%. Sunil Mittal has categorically denied media reports stating that Bharti was in talks to buy a stake in Paytm, saying that we have no plans, it was never even mentioned, and saying they, quoting the media report, mentioned my name, and I can confirm to you that this is not in play. We're not looking at a stake in Paytm whatsoever. Adani Ports, though, today, and I think that's a standalone case within the rest of the Adani Group entities, that's actually holding up 6%. The JM Financial Group has initiated a coverage with a buy, and a buy with a target price of 800 rupees per share. So that is one stock which is holding on. But yeah, suffice to say, Kunal, that no respite for the rest of the market. While it started off quiet, we're down 100 points.
Yeah, we are down 100 points, but then net, it's still not too much of a major gash for the index. I think we are just playing around this 200-day moving average by a margin of 50 points, 60 points odd for the index. The important part was the data which I highlighted in the morning, that there's been a dramatic change of the options data for the Bank Nifty, where 40,000 strike is acting as a major support. If you look at the intraday charts, 40,060 or 70 is where the Bank Nifty made a low, and we've seen a bounce back from the Bank Nifty, which means that traders are still expecting that if there are any kind of an intraday dips, that would probably get bought into till the time Bank Nifty holds about this 40,000 mark. But net, I think it's still not a tradable kind of a market when you look at the indices. The action is more towards the mid-cap end of the markets today, because the mid-caps and the small caps are tad bit are outperforming a tad bit. So I would probably concentrate more on stock-specific opportunities even in this kind of a market.
Okay, stock-specific opportunities is what you look at, but also take a look at what's happening across the globe, because the Dow futures for now are suggesting a downtick of almost 150 points to start of the trading session. The Nasdaq futures are down as well, and the European markets too have started on the back foot. Remember, yields is something which has been rising for not only India, which stands at 7.4, even in US it's very close to that 4% mark, and the dollar index too is close to that 105. And all of this is telling you that there's a risk of rally which is happening with respect to the safe haven buying coming in. But let's discuss some more stocks and sectors. We have Naresh Murani as well as Daljit Singh Kohli joining us. Daljit, just wanted to get a sense from you as far as the overall market is concerned. It's clearly lacking triggers. What do you think will make the market go higher from here on? Because whatever was the near-term trigger with respect to earnings, budget, etc. has played out already. What next?
Yeah, good afternoon. I think that is what market is looking for and waiting for some kind of trigger to come. Nobody knows as of now what can be the trigger. The biggest obstacle right now for market is the rising cost of funds. Everywhere in the world we know that interest rates are going up. from a scenario of almost half of the world in negative interest rate to now almost everybody is talking only on rising interest rates. There is a big change which has happened. So things which were forgotten for last 10, 12 years, that we could actually have a higher cost of capital, that is coming back to realization. And that's where most of the companies will have to adjust their business models. Margins, if you see, in India also, we have seen last 3, 4 quarters consecutively, there has been a big pressure on margins. Despite the fact that revenue has been maintained, but margins have been contracting. And as of now, there is no sign that this is going to relent. That means that margin reversal will start from next quarter onwards. There are no signs of that. So therefore, market is obviously nervous about earnings downgrades continuously happening. And in that scenario, even though valuation reset has also happened from 22 to onwards, 22 times of 1 year forward, we have come back to 17, 18. But I think entry point at 17, 18 is also not very comfortable. People would probably look at 15, 16 times to enter in. So I think some more froth has to go off from the market when investors will start looking at reinvesting or building up portfolios again, topping up the portfolios. As of now, there is a lack of leadership from any sector, lack of leadership, any particular trigger which will drive this growth coming, because in fact, there is only negative news flow which is coming in.
Daljit, you said that markets could get cheaper from here on. But do you think a lot of sectors have started to look interesting? I mean, pharma 1 year back was cheap. It's now cheapest that you could have probably seen in a while. Similar is the case with a lot of other sectors. You think that select sectors and stocks within the large cap, mid cap universe have started to look good as well?
Yes, I think that is what the theme would be from here onwards. Because one thing is very clear now, buying at any price is out of the way. So high PE multiple, high valuation will not work. Quality is also out of the way. For 12, 13 years, we have been only looking at quality at any price. You just have to see Asian Paints and Unilevers of the world and just buy it. Forget about the valuation part. That is all now thing of the past. From here onwards, the theme which would work is probably where there is an earnings trajectory and where there is a scope of improvement. And that is what exactly we are also going to look at in our portfolios. There are 3 or 4 sectors where we think that probably the worst is coming to an end. Of course, we can't say worst is behind because still there is a lot of uncertainty, but it is coming to an end. So maybe things like chemicals, pharma, where the margin trajectory is likely to improve from future onwards as the inventory rationalization happens. With all these companies, the problem was that their customers were riddled with a lot of high cost inventory. So they were not able to pass on any new price hikes. They were also not able to sell them more because the previous high cost inventory was problematic. Now that is going away. I think pharma, especially bulk drugs, API manufacturers, they will probably start seeing things improving from next quarter onwards. Cement should be one sector where we'll see a good improvement because logistic costs have come down, coal prices have come down, and cement prices have gone up. So both the things will help them in that. So metals, there will be slight improvement because again their inventory cost will go down. So certain sectors, yes, in autos we have already seen where the cost rationalization has already happened. Margins have been very well maintained. So these are 3, 4 pockets where one would see some improvement in margins, and therefore these will give some opportunities. IT is one sector where probably the top-down approach is still waiting. We are still waiting that what will happen about recession in US.
Right. Okay, stay on with us, Daljit. Lots more to talk about. For now, we're going to take a very quick break. Vedanta has cracked almost 7% in the futures. Cipla, Alchem, Hindalco, Coal India. These are your key pressure points in trade. Although intriguing as it may be, while the Nifty has cracked 100 points, the breadth of the market is not as bad as you have seen on the past many trading sessions. when it's way underperformed what the benchmarks have done. Today, actually, it's pretty much neck and neck. And within the F&O gamut, it's actually holding out in favor of the advances by a slim margin. But we're going to talk about all those buzzers on the other side of this break.
Down for the market, 17,286, broken below the 17,300 mark and been there for some time now. Let's now go across to Shrishti. She is with us talking about auto sales, which will be declared tomorrow. Remember, Feb is the smallest month in the 12 months, so expectations are in line with 28 days move. Shrishti, tell us what essentially is expected.
Well, when it comes to the auto sales data, let's talk about the segment-wise performance. And let me break the surprise for our viewers that this time around, two-wheelers can actually surprise you, because a slight improvement is what we are expecting. Two factors contributing to that. Firstly, the wedding season and the weddings that happen in the northern part of the India, that is expected to support the two-wheeler space. And not just that, if you look at the urban demand, that is also expected to flare better, and especially in comparison to the rural demand. So both of these factors should help the two-wheeler recovery. And if you will see, this is the only segment where we are expecting a sequential growth in comparison to the rest of the segments. Onto your screen, you will look at the numbers of Hero MotoCorp, TVS Motors, Bajaj Auto, as well as Eicher Motors. They will tell you the story. And not just that, we'll also look out for the numbers of exports data when it comes to the TVS as well as Bajaj Auto numbers. Apart from that, coming to the passenger vehicle segment, what the dealers are highlighting that there has been an 8 to 10% decline in the inquiry levels, but nevertheless, the demand on ground is still healthy for all these companies. On a month-on-month basis, we are expecting just a single-digit decline, so we'll be watching out for the other commentary onto the booking side when it comes to the management commentary. Coming to the other space, that is the commercial vehicle segment. Here too, we are expecting a single-digit decline. And lastly, talking about the tractor segment, two factors will be at play. Firstly, like we told you, that the rural demand is not that aggressive, what we are finding on ground. And apart from that, what the agri sentiment is holding right now, they are fearing a severe heat wave coming ahead for India, and that is why the sentiment is not that great. And if you look at the tractor numbers, then for M&M, we are expecting a decline of around 17% on a month-on-month basis, while for Escorts, we are expecting the sales to be around 7,000 of units. That will be a jump of just 5%, but other than that, we'll also be watching out for commentary. So apart from all the numbers, key to watch will be two-wheelers this time. Back to you. We'll watch out for the two-wheeler space, but the market is also something that deserves attention, because we are back below the 17,300 mark. As we pointed out, it's the broader market which is faring a lot better. To the bank Nifty too is under pressure, with the exception of PSU banks, which are just managing to outperform a tad bit, but definitely a lot of traction when it comes to the Adani group of companies as well. As we were talking about earlier, with the exception of Adani Gas and Transmission, all the Adani group of stocks are rallying today. Adani Enterprises up 16%, Adani Ports is higher by 6%, and then the other names like Wilmar Power, etc., Green, etc., follow with a 5% gain. And we've also made some interesting data point as to how these stocks have risen from the lowest point that we had seen with respect to the 52-week lows as well. And that data should come up for you on the screen as well. But in the meantime, let me take this question across to Kush as well. Kush, from the entire Adani pack, is there any name which is looking strong on the chart? Because the likes of gas, etc., have seen a structural breakdown. They have been locked in lower circuit of 5% for 20th consecutive session.
Well, I would say this is still something that, the traders and investors should take, with a pinch of salt. The kind of rallies that we are seeing, some of these names have recovered, quite sharply from the lows. But, the only spaces that I like here are basically ACC and Ambuja Cement. Other than that, I'd still probably be, a little more cautious. I need some more data points and some more up move to confirm that, indeed the tide has turned. Ambuja, on the other hand, as I said, seems to be forming a base close to, the 325, 330 levels. Now, once, this base is already in place, someone wants to enter, that would be my stop loss. 330 is where I would place my stop loss for a more positional bet. 375 would be my first target, and 400 would be my second target. So this is the only space, if at all one has to venture in, this is the only space that I like.
Kush, on that note, let's also have your closing trades.
Two of them, one is a BTST, the other is an STBT. the metal pack hasn't really done well. We've seen volatility even when the markets were doing well, and when the markets are down now, these these stocks are cracking like house of cards. So JSW Steel is one name that has broken the key support zones and is trending lower. This is a short bet. 650 is my immediate target on this. 680 would be my stop loss. ABB is one stock that would be on my radar on the buy side. 3225 is my target on this one, and 3125 is my stop loss.
What about you? Closing ideas?
So closing strategy, AB Capital is something which I'm looking to buy at current levels. Very interesting breakout today for the stock, swing breakout as well as an inverted head and shoulder breakout for the stock. So that's a stock which I think at 143, 44 levels looks very attractive.
Right. Daljit, you spoke about a lot of sectors, but what do you make of some of these metal companies, cement companies? They have done a lot of expansion, but they made cash flows, they've paid back their debt. So how would you look at their post, this sort of a run that they have? What valuation they should settle at?
Cement companies were very bullish. I think the two stocks that we like are Shree Cement and Dalmia Bharat. Both of them have given good returns also, but we still continue to maintain positive view. Even Ambuja has come to a very attractive level of 325, 330 levels. This is the place from where it is actually started prior to all this news flow from the group, which is under a lot of scandal that came into. So we think that the cement itself will do well, very well, from both the sides. Realization is also going up and the input cost is coming down. Some of the benefit will be shown in this quarter when March quarter numbers will come, and some more will flow into the next quarters also. And most of these companies have also gone for waste heat recovery and all of those things that will also add to their cost savings. So cement is definitely one. Metals is always a tactical back. So you normally don't invest in metals for 2-3 years or 1 year kind of time frame. You always invest only on the technical thing that if there is any macro news flow which will either bring positive or negative, accordingly you play on that. So metals is more like a trading bet, and therefore we don't have it in our portfolios. It's very temporarily one or two sometimes coming.
Okay, Daljit, we'll let you go on that note. Thank you so much for joining us with that fundamental take on the markets and the sectors. But for now, slipping into a very short break with the news that the markets continue to reel under pressure. Sensex down 400, Nifty down over 100 points.
Back with closing trades right here in ET now, and the pressure continues to mount for the equity markets. 125 points lower for the Nifty futures. 17,300, although we did breach sub that level as well on the Nifty spot, 82 points lower as we speak right now. Vedanta has come cracking hard at 6.25% lower. Hindalco is down 2.5%, and other metals as well are getting quite under pressure. Reliance, and I think that is that one key stock which is also weighing quite heavy. It's down almost 2% right now. 23.32 is where it's currently at for the futures. 23.24 on Reliance spot right now. Anand Tandon as well joins in on the show, but before I take it across to Anand, Kunal, just a quick comment on Reliance, because just when you thought that this is going to break out, it's breaking down actually.
Yeah, I think it's breaking down, but again, no major confirmation of a breakdown for Reliance in terms of levels. 2,200 to 30, I think, was the level for Reliance from where this rally or this bounce started off. We're still at a 100-point cushion when you look at it from that regards. The gas stocks, the energy sector overall is looking to be into a recovery mode. So I believe possibly over the next couple of weeks we can expect Reliance to bottom out over here. And even if you look at it from a medium-term time frame, the stock has been trading into a band of 2200, 2250 as a major support and 2750, 800 as a resistance. So even if someone who has a medium-term kind of a time frame, I think buying the stocks at the lower end of the consolidation always presents a higher risk reward. So in both aspects, I think it's a attractive buy zone for Reliance Industries.
Okay, so that's about Reliance Industries, but let's mark what's happening with Bank Nifty as well, because that one is showing a bit of attraction at the moment. Let's pull up the intraday chart. Of course, Nifty is also gaining ground as we speak, but look at the sharp move as far as Bank Nifty is concerned. Our technical experts have been pointing out how it's probably in a bit of an oversold territory now and maybe ripe for a bit of rebound as well. Kush, what's your take as far as Bank Nifty is concerned? Are you of the view as well that it's likely to head higher?
Well, perhaps to 40,500, 40,800 kind of zones, but I don't think the weakness is over in this. The Bank Nifty fall was actually much sharper and started a little sooner before the Nifty, and we got into an oversold territory on the Bank Nifty, and hence we're seeing more of a technical bounce. As Kunal just a while pointed out, just a while ago pointed out, 40,000 is a very key support zone technically as well as from the derivatives data. But I think let it pass, let some time pass. We see a couple of weekly expiries. This could very well continue its a down move, and I wouldn't be surprised if we reach 39 200 kind of zones on this one where the 200 DMA lies. So this is more of a technical bounce. I wouldn't buy too aggressively into it just yet.
Point taken. Anand Tandon is also there with us on the show. Anand, hi, good afternoon. Which are the sectors that you are additionally deploying capital into or would recommend a buy at this point of time?
Well, assuming that you've got your asset allocation where you want it to be, I think the only places you can look at is where the earnings is most likely to come through. And for example, the sector you were mentioning, banking is certainly one of those which will be driving the earnings growth for the current year, along with some of the other financials, like for example, insurance. So I would imagine that within the financial space, both insurance, to some extent, housing finance. Of course, housing finance has some issues with the amount of competition that is coming through. But otherwise, banking and insurance are two sectors which I think should be still significantly overweight in the portfolio.
Sorry, just wanted to point out the stock of CG Power as well. A large trade has happened, and remember that MSCI rejig was supposed to happen today, so that's what is coming into play. You have that stock wherein the fund inflow of around $164 million was expected. Bank of Baroda was another candidate, while there were some outflows which were expected from Biocon as well. Even for Adani Enterprises, etc., there was some outflow that was anticipated, while the likes of Reliance, Infosys, etc., were expected to see some small inflows, but that seems to be happening just barely at the moment. Also, in terms of the events that you need to watch out for tomorrow as well, of course, today we'll get the GDP data in the evening, so tomorrow the markets will react to that. There's another important event at 5 p.m. today wherein IMD will talk about the forecast and outlook of the weather for the year. It's a bit of a scare at the moment that whether El Nino effect will be there, which would mean that the temperatures will be higher, the rainfall will be lower, and that means that there will be a pressure on the agri output, therefore having an impact on inflation as well. Separately, the manufacturing PMI data for India and the rest of other countries will be available. Auto sales data will be out tomorrow, so we'll watch out for that. In company-specific action, remember tomorrow is the date that Axis Bank finally completes that Citi deal, so it will be interesting. You also have 361, which is in focus with respect to the bonus issue, and then Triveni Engineering too is in focus because the buyback via the tender offer will close tomorrow. Other important events globally, there is a Tesla Investor Day, so commentary from Elon Musk would be interesting to track. The NASSCOM event in person will start tomorrow, so we'll wait back for more commentary to come from the tech sector. And chemical industry too has an important conference, so we'll get you more details as far as those sectors are concerned. But definitely a lot to watch out for. Anand, just quickly before we take a break, I wanted to get a sense from you as far as how the entire IT sector is placed at the moment. We have seen decent amount of recovery from lows since the start of the year, but where do we go from here on?
So I think we've come to a stage again where you need to worry a little bit because it's not as if the order books are going to be very robust. But that said, takeout deals are still happening and they're happening at reasonable valuations. Companies that need to worry are perhaps some of the smaller companies because I think whenever you have issues like this where you have a demand contraction to some extent, there will be a more consolidation in terms of the number of vendors. So the frontline companies in particular like Infosys or maybe even HCL Tech should be able to expand their client base as compared to some of the smaller size companies. Companies like Tech Mahindra, etc., have not been very bullish in terms of their commentary. So I think among the IT companies, you want to stay with the larger companies, and within that, perhaps as I mentioned, HCL Tech and Infosys seem to be more or less the best picks at the time given the valuations.
Right, okay, that's the take coming in on what the technology sector is up to right now. The Adani group of names surely are springing up today. So Adani Enterprises is holding up 14.25%. Ports looking up. Ambuja Cement as well is seeing some amount of traction, 4.25% higher. And Z as well holding out 6.5% as we speak today, while of course the index is not. Kunal, anywhere close to a bottom for Adani Ports, Ambuja or Adani Enterprises?
I think Adani Ports has already formed a major base. I think 424, 425 was the support for Adani Enterprise from where the stock had bounced back. And I think from there the stock has just gained a lot of traction. Even in this last 1 month, or rather, 2-3 weeks, in the second half of the month of February, the stock had gone into a time-wise correction. And unlike most of the other Adani group of stocks, like Enterprise, Part, Total Gas, etc., where the stocks were getting into a correction and a retest of the previous lows. So I think Adani Ports is the strongest name, at least as of now, and most of the other stocks are just going into a short covering move. So if I have to pick maybe one stock from the Adani group which looks attractive from a technical standpoint, that would be Adani Ports.
Right. Kunal, when we just look at the banking names, you did mention NBFC, KB Capital, but do you believe that banking can be looked forward because a lot of stocks have corrected quite significantly?
Yeah, so stocks.
May not the bank Nifty, as you said, 40,000, or you need to watch out for levels, but any specific banking stocks?
So PSU banking stocks specifically would be something which would look very exciting, because the rally which started off from their July or August lows for PSU banking stocks, and the correction which has happened from the December highs, January highs, more than 35 to 40%, now poses a very attractive entry opportunity. So for example, UCO Bank, Bank of Baroda, I think at 155, 57 levels, Canara Bank at 290 approximately. So these are very strong indications that a mean reversion or a retracement has happened for these stocks, and they could probably get into the first leg of an up move. But for that, a confirmation would be that these larger cap private sector banking names, they have to stop falling, because what's been actually happening is more of a set off, because when PSU banking stocks rally, the private sector banks are the ones which are going into a correction, and that results in net no effect on the bank Nifty. So for the bank Nifty to move up higher, you need at least one end to perform and the other end to stop falling. And I believe if we see that happening, then we can build in a case of a stronger return for the near term.
Okay, let me talk about some more stocks which are reacting to the price volume action as well. JSW Energy, I think, makes it to that list, given the fact that we are seeing a sharp spike on that one. It snapped the 4-day losing streak. It's the biggest single-day gain that we have seen on JSW Energy since October of last year, and the volumes are 5x the usual that we see over the last 20 days, so that's something to watch out for. Zee Entertainment too has finally snapped the 6-day losing streak now. Biggest single day gain coming in since October of last year, and the volumes also on the heavier side, almost 2 times the average of 20 days. Vedanta has been declining for 8th straight session. The stock is making lower highs as well, and the volume is at 6 times the 10-day average. And of course, today there's a bit of a nervousness coming in on regards to it being a high debt company, and we have seen that of the parent, which is Vedanta Limited, the bond yields had spiked suddenly, adding to the nervousness for a lot of investors as well. But as we were talking about earlier, a big event is lined up later today, which is the Q3 GDP data for India. We spoke with Upasna Chachra, the Chief India Economist at Morgan Stanley, and here's a view as to what to expect from the Q3 earnings this time around, or rather Q3 GDP data this time around.
We expect agriculture growth to be relatively steady and probably in similar terms on a YOY basis. On the services side as well, we've seen from high frequency data that services indicators remain pretty okay in the December quarter. If you look at PMI services, air travel, hotel occupancy, other indicators which go in the financing, like the real credit growth, deposit growth numbers. So I think services will hold up. There could be some pockets where sequentially indicators have slowed. But overall services should hold up. On the manufacturing or the overall industry segment wise, I think manufacturing will probably continue to see some drag, again, basis the high frequency, like the IIP numbers that we got in the December quarter. The rural demand or activity indicators that we track on a high frequency basis, yes, remain a little lackluster. But having said that, I think the worst is probably behind us.
Okay, that's the take coming in and what to expect and anticipate from the GDP data later today. But Anand, there's also the IMD announcement coming in on monsoon, and it seems like this is going to be a hotter than hot summer, and monsoon may not be as well spread as it was for the past 3 years. Just wanted to understand, that obviously is going to have an inflationary bearing to it. We've already seen the rural end of the economy see a slump in terms of incomes as well as the demand generation thereof. Whether or not to still stay underweight the rural focus sectors?
Well, I think it's a little early in the day to decide whether the monsoon will be poor, and more importantly, whether or not that will have an adverse impact on the production production of food grains. Obviously, given the fact that for the last 3 years the government has been emptying its granaries, you need to have a reasonably decent production of food grains for you to not have inflation coming through. But either way, the prices have already gone up to a level where if you see the minimum support price is no more acting as a attractor for people to sell grains to the government, and obviously that is causing that means that the prices in the market are higher. So with higher prices and input costs perhaps not necessarily rising in the same proportion as far as farming is concerned, I would argue that it may be actually time for you to actually look at rural demand, because obviously better realizations will mean that there will be a little better more purchasing power in the rural hands. Now, if the summer becomes really as hot as forecast and the rainfall also shrinks, then some of this will become a little bit of a risk. But I think to a large extent the market is already pricing in a poor performance from rural India, and to that extent, therefore, there is less downside to my mind in those stocks. I would therefore consider that a small bet in terms of a revival in rural demand may actually be, maybe a more appropriate position to take now.
Betting on the revival as far as the rural space is concerned, but let's also bring in the expert on the weather conditions. We spoke with Mr. Sharma of SkyMet, and he believes that the El Nino scare is real.
El Nino scare is real. It's coming up, okay? Early days at the moment, because we still are in a La Nina phase, which is decaying, fading away rapidly. And then within about, say, weeks, 2, 3, 4 weeks or so, we will have neutral conditions coming up, and then followed by El Nino conditions. You see, these are the ocean-borne phenomena, and therefore they are slow. They are very gradual, whether it's a La Nina or El Nino. They build up gradually. Okay, it will start anytime around, say, May, making its presence felt, and then June onward, in any case, the monsoon starts, and then we will see the El Nino conditions clearly, and the impact will start almost straight away, but then it should peak sometime when we are halfway through the monsoon. That is the time when I expect it to peak. Before that, yes, it is a harsh summer can be expected. Temperatures, soaring temperatures are reaching 40 degrees, many pockets earlier than the normal date. All that will precede the onset of El Nino conditions.
Okay, so brace yourself for a scorching summer. That's the word coming in from SkyMed. But a scorching summer would mean perhaps good news for a lot of these consumer durables names. So, Kush, wanted your take that from the entire pack. Is there any name that you would like to recommend as a buy? Blue Star, Voltas, Havells, Whirlpool, etc. Anything that catches attention on the chart basis?
Blue Star does. Voltas had actually quite, seen a run up and, it sort of gave way around its 200-day moving average. So that's probably played out. But Blue Star continues to, gain momentum. The breakout is sustainable. We've seen volume back moves even after, the kind of jump that we saw from 1200 odd levels. So for me, this is a nice consolidation phase where the stock is, getting ready for its next leg of up move. I wouldn't rule out a move until 1500, as the first target and 1575 as the second one. For a fresh entry, 1380 would be my stop loss. So among the packs, this one looks stronger on the charts.
And also a take when it comes, Kush, to a couple of these other names which are reacting negatively. SpiceJet, of course, is down 7%, and you have Cipla, which is down 5%, reacting to that news flow of the details coming in for the for the Pithampur unit's USFDA observations.
SpiceJet, I would say, is a very clear avoid. Cipla also is the kind of crackdown that we've seen, and this actually began, a lot earlier. About a few days ago, about 10 to 15 days ago, when the stock gave away from 1,000 levels. It's only been one way down, and it's trading very close to its support zone of 900. Around June, July last year, this was, a very key support zone from the where the stock bounced. If it does hold on to that, then you can expect some kind of an up move. Also, the stock's now gone into a very oversold territory, so there could be a technical bounce. I wouldn't venture, a very aggressive trade on this one just because the stock's fallen a little. I would want it to, hold on to the 900 level, show some kind of bounce, and perhaps then we can consider. For now, this will be an avoid for a fresh buy. If anyone has an existing position, 900 is where I would place my strict stop loss and get out in case the stock breaks that level.
Anand, what's your take on hospitality and some of these urban consumption plays? Lemon Tree Hotels, ITC, of course, has been hitting fresh highs. Indian Hotels was in a bit of a consolidation phase, but seems to be coming out of it. And you also have Phoenix Mills today, which is up around 6.5%. Your take on the entire urban consumption and this hospitality theme?
I think as hospitality is in a league of its own. We have had, because of this G20 conferences, etc., we've had sold out events, sold out rooms for across most major metro cities. And I think that trend will continue for most of the year, which will mean obviously that hotels are going to have, will be raising prices, which they have already done. So high ARRs and occupancy automatically implies that this will be a great year for hotels. Now, to some extent, that is already perhaps been priced in, but as the results come in, it is very likely that the market will continue to price it higher and higher. But you would have to worry about it perhaps in the second half of the year, where perhaps prices may be higher in terms of stock markets, and it is unlikely that you will find the same level of occupancy going into the next year. So, from that point of view, excellent next 12 months results is what I would anticipate. For the rest of the urban consumption, not so much. I think the higher end of the consumption, obviously, India has a lot of very rich people which can make up a country in most other places. They will continue to have no impact on their consumption, but for most else, I think consumer discretionary is likely to suffer from a slower demand growth this year.
How some of these stocks have performed, and I was just looking at the intraday graph of Lemon Tree. That sprung up almost 5.5% intraday today, while Indian Hotels, after getting sub that 300 per share price level for just a brief bit, it's seen some buying and the stock has recovered all the way to 310. But ITC is the one which is a little bit on the sidelines, at least for the last two trading sessions. Kunal, you were making an observation as to how ITC may be topping out, at least in the near term. And while you continue to be bullish on the hotel stocks in particular on IHCL, right?
Well, yes, and I think both these trades would probably should play out, over the near term, because ITC is now going into a very deep overbought kind of a territory on the charts. In fact, today after this 1%, 2% downtake for ITC, it's also confirmed a minor breakdown on indicators, which could probably take the stock maybe another 10 to 15 rupees lower from current zone. So wouldn't be surprised that, the strategy which I've maintained over the last couple of days, that it's better to try and book profits from ITC, especially around this 395, 400 zone for the stock price, and then redeploy the money back again when the stock hits 360 or levels closer to those kind of territory. Indian Hotels, on the other hand, the risk reward is extremely favorable around the 300 mark. In fact, if you look at Chalet Hotels, EIH Hotel, Oriental Hotel, as well as these smaller group of stocks in the last 1 week, 1 month, these stocks have actually given some very good rebound. Indian Hotels, on the other hand, has gone into a correction, and the stock has bounced off from the 300 level. So again, the risk reward is favorable for the stock at current zone, which is where I would maintain a bullish stance.
Kunal, would you look at Triveni Turbines? It's up 20% in the month of Feb.
Yeah, it's been a surprise because I frankly don't track the stock that closely, but then the last 1 month, the stock has seen very consistent
No, we all don't track it so closely. It just came in as a top gainer, and complete outlier.
No, it's the manner in which stock rises. So, it's not a knee-jerk price action that the stock has seen a 10%, 20% uptick in 2 or 3 consecutive days. It's been steady built-up of volume. So, look at the last 1 month, the volumes have been very slow, steady, gradually uptick for Triveni Turbine. Today, of course, the volumes on the much higher side. If I'm not wrong, it's a 5 or a 6 month high volumes for Triveni Turbine, but then this could probably be a topping out formation because the stock is unable to hold today's high level. So would not venture a buy at current zone, but maybe if the stock corrects to 285 to 90, could be a buy.
Right. I just wanted a view on GAIL as well, Before 2020, we've seen such moves that GAIL does well, then tends to correct, or, ONGC or Oil India. And then we had that entire phase of 2021 where you did see a continuous rally. Do you think once again we have gone into that phase?
Yeah, I think so. Over the last many weeks, I've been saying that these gas stocks and energy names, I think they have shown signs of a breakout. GAIL specifically around the 100 plus mark has given a big breakout. So in fact, yesterday on Chartbusters, I picked up GAIL as a stock, And I was indicating that how over the last 10-15 years there's a phenomena which keeps on reoccurring for the stock price. There's an technical pattern in Ichimoku pattern breakout which happens for GAIL on the weekly charts, and it leads into at least a 1 to 2 year rally, and we've seen rises of more than 50% on an average for these kind of an uptick. So I would believe that the cycle has just started off for these names, and wouldn't be surprised that from here on for the next 6 months, 1 year, these could be very interesting picks.
Okay, that's the view coming in right now. Okay, Axis Bank is likely to announce the completion of Citibank consumer business acquisition on March 1st. That was known, right?
Yeah,
right,
so
but they'll have a press conference
Yeah.
and probably their Citibank will be named Axis Bank, I think.
Yeah.
Renamed as Axis Bank branding. So I think that is be the important one. And more importantly to watch out for will be, once they do this, they will have to do fundraising for growth. They'll have to do fundraising for growth. So I think what sort of fundraising do they do when they announce the acquisition?
And
the
how
price was
sizable?
700. Yeah, the price was 700. Now they'll issue price at 850. So wait and watch. A lot of things have to happen. And more importantly, I think once they do this, it'll be the first time that we'll get the data as to how many people have decided to stay back with Citi after that entire exercise which took place, especially for credit cards.
Yeah, absolutely. Okay, that's that. Axis Bank, let's just revisit where that stock price is. In the red, about 11 bucks or so is where it's currently at. For the rest of the market, we're closing in about 125 odd points lower for the Nifty futures. But yes, definitely off from the day's lows. So good time as any to get in some BTST trades going. Kush, what's on your list?
Well, I have Raymond as a buy. The stock has actually been doing rather well. It's only down with the markets, and it's formed a nice base around 120, 1220, 1225 zones. So this could perhaps be a start of the next leg of up move for the stock. So Raymond is a buy. The target here is 1325, a very strict stop loss of 1250. So this is one buy. But as I said, metals is something that I have on the sell side. So JSW, I reiterate, is a sell call with a target of 650, and the stop loss here would be 680.
Kush, any view on Axis Bank as such? I mean, it was the most go-to bank after Q2 numbers, and it's really corrected quite a bit from there.
It has, but this is actually largely in line with the rest of the private banks, and even though it's already corrected quite a lot, this wouldn't be in my top three as if we talk about the pecking order. So there'll still be HDFC and ICICI, and ICICI, HDFC above it. So I wouldn't still have this as my top three, in the private space. The bounce that we've seen in the last couple of days is more of a technical bounce. The stock hasn't been able to meaningfully take out its 20-day moving average, which lies at about 860. So for me, this is perhaps still a sell on rise kind of a scenario till 860 is taken out. So again, nothing nothing major on it, no breakout signs yet. I wouldn't buy it just yet.
Also pull up the intraday chart of Safari Industries because that's seeing quite a bit of spike at the moment, and similar is the case with Borosil Renewables as well, and even Jyoti Labs and Sun Pharma, or rather Spark for that instance. All of these stocks are seeing a sudden spike at the moment. But time now to get the BTST ideas out of the way. Kunal, you go first. What's on your BTST list?
So two buy calls. GSPL is one of the stock which is heading towards a breakout about 280 mark. So would suggest a buy with an expectation of at least another 30 to 40 rupees on the uptick. 320 as target. Stop loss could be kept at 260. And ONGC is the stock which I think about that 155 mark. So it's a caveated buy about 155. Would recommend a buy on ONGC for a target of 170 and stop loss at 150.
Okay.
Anand, when we just talk about, a correction in DMart or some of the other FMCG names that have not performed well, you think it's just a time-wise correction? I mean, PEs were abnormally high and to deliver such growth was difficult. So it's just a time correction for some of these names?
Companies like DMart do have a problem in terms of valuations, and the fact that the growth is tapering off. Finally, you are paying huge premiums only because you were expecting superlative growth. Now, if the growth begins to taper off, obviously that's going to be a bit of a challenge. So at this stage, I think if you're looking at retail, it may be better to focus on companies which are actually in FMCG rather than worry about those who are actually doing the retailing.
Anand, Paytm, of course, is coming under pressure today, 6% down, of course, on a couple of news pieces. One is that Mr. Mittal categorically denied that he's not looking at buying any stake, and that would mean that there is no, buyer for the block, because it's pretty much known that Ant Group as well as SoftBank will have to offload some stake. But now there is this nervousness that the oversupply will come into the market, and that's why we are seeing this decline. Would you be a buyer for Paytm at the current level, sub 600?
So it's not so much a question of levels. The question is that Paytm may have may have some upside from here if they actually morph into a proper market platform. And they are one of the earlier ones, for example, on ONGC. Now that's very early, for example, to talk about how much that can create in terms of traction. But I'm personally quite bullish on what ONGC can do to the e-commerce market. And with Paytm, for example, being one of the key aggregators on that right now, they could be a major beneficiary. So I think the first hurdle has been crossed, where they can perhaps now show that they are not going to burn any more cash. The second would be to see where the actual growth comes from. So a small bet could be taken, but you should still be prepared for some downside in the near term.
Zomato, take your pick.
Yeah, I'll go for Policy Bazaar if that's the third option which you are giving. So I think that's a much more better stock, a far more stable, at least in terms of charts. The last 1 or 2 months, specifically the time pre-budget and post-budget, the stock has shown some very good price trends, volume patterns for itself. So if you give me a third option, then I would probably go for Policy Bazaar.
Okay, PB Fintech it is. In the last 1 month itself, almost a 40% price appreciation is what that stock has seen. Let's begin winding up for the day then. Anand, we'll let you go on that note. Kush Kunal as well. Great to have you on the show. Managed to lift off from the session low, so I think that was the biggest takeaway. And the fact that the breadth has managed to even pick up further. About 110 stocks are going home as winners, but just about 80 odd to the declines. And I say just about 80 because we've had a far much market breadth in the last actually all month to date throughout. The gainers firstly, then Adani Enterprises 14% higher, Z up nearly 7%, Adani Ports up 5%, Dixon up 3.6%, Ambuja up 3.5%, Asian Paints made recovery, Britannia, M&M, Ultratech Cement and Tata Motors along with HDFC Bank were all the winners today. On the flip side though, Cipla, Hindalco, DRL, Tata Steel, Bajaj Finance, Reliance got a fair amount of crack today, was down about 2% today, and that weighed heavy definitely on the indexes. Alchem, Cipla, Vedanta, these were all big laggards in today's trading session. Just looking at some of the OI build-up and HCL Technologies, a stock that our chartists as well have been highlighting along with Tech Mahindra, of course. HCL Technologies has seen a 33% OI build-up. Stock though managed to close flat after a very choppy session. BOB, very active yesterday and today as well. It's seen about a 30% OI build-up. The stock has been very, very choppy, closed in the red, but it did see a fair amount of green.
The Sensex down 280 points. Not a great day for the bears, but that's about how we are shutting shop. From the entire team who put this show together, thank you so much for tuning in.